So the stock you own reported great earnings and beat on revenue, beat on earnings, and just all around beat. But the stock price dropped. Why would that be? So I'm going to go over a couple common examples here. Here's the first example. First example is Meta. And you could see here's earnings from earlier this year. And it has this huge drop, 10%, over 10%. So you look here and they crushed earnings. They beat revenue. So they crushed the whisper number, the expected number, by 9%, and then almost 1% on the revenue side. So what happened? So what happened was, if you were to look at earnings, there's kind of two different parts that analysts are generally looking at or thinking about. One is, did your earnings and your revenue match or beat the expectations that we had for last quarter? So in that case, it was a big yes for Meta here. But the other part that they're looking at, some kind of indication of what do future earnings look like. So if you're able to surprise them to the upside and say, hey, we're raising our guidance or raising our expectations for next year or next quarter or whatnot, then that's a good thing. But on the flip side is what happened to Meta. And in this case, they announced, Mark Zuckerberg actually announced that they were going to have heavy investments in AI, investments in chips and what other kind of changes they need to make for their software to utilize artificial intelligence. And that was unexpected because he said that it's going to be heavy capital expenses and it's going to go on for multiple quarters. And in turn, he did not say how those investments would translate to additional earnings. So at this point, when Wall Street hears that, they just know, okay, I didn't expect those additional expenses, at least not in the kind of dollar amounts that he's talking about. And I don't even know how it's going to benefit Meta. I don't see an improvement in the earnings forecasts. So, of course, people are going to have kind of a negative reaction to this, where it's like, okay, here comes some unexpected expenses, and yeah, I don't know what the upside is. So it moved down. So that's the reason that stocks often move down, even though they beat earnings and revenue on the prior. Guidance is the other factor. Or what are they forecasting? Are they forecasting something that is better than what Wall Street is expecting, or do they forecast something worse? And in this case, it was worse. And so there was an immediate drop. Since then, you could see it's recovered nicely, but that's the reason for the drop here. Now, another example is Netflix. So let's look at Netflix, and Netflix has this from earlier this year where they crushed it. They beat the expectations by almost 17% on the earnings side, and top line growth was 1.35% better than expected. And yet it had this 9% drop the next day. Like, how could that be? How does that make sense? With Netflix example, it actually wasn't related to their forecast directly, but what they said was they're going to stop reporting on subscriber growth. And Wall Street, for Netflix, since it's a subscription service, typically relies on subscriber numbers to determine how future revenues are going to look, which makes sense because, you add a subscriber, you're going to get that extra, $15 every month. But Netflix surprised Wall Street. They did it in a way where they said, we're going to stop reporting at the end of the year. So they gave notice, but still it was a shock to Wall Street because they took it as A, they were surprised that it happened. B, they don't know what that means in regards to future revenue. Like, Does it mean that they're trying to hide their membership growth numbers and subscriber growth numbers? And that's gonna make it harder to forecast, or they're hiding it because they suspect bad news is coming? It's hard to tell, but that's what Wall Street doesn't like. They don't like surprises. They don't like ambiguity. So in this case, that's why it happened. So these are two examples of companies that crushed their expectations in terms of earnings numbers. So they no doubt had beats on the top line and the bottom line, but the stock still got punished in these cases just because either the expectations were not lining up in terms of future quarters, and so investors took their money out or got a little nervous, or in the case of Netflix, there was some kind of news that made future earnings unpredictable, and it was a surprise to them that they would no longer have kind of this indicator that they use to forecast future revenue and earnings